ING, which is one of the larger banks in Europe, issued a study on the lending platform Aave, which is a top 3 DeFi lending platform in the Ethereum ecosystem. And they noted that it has more potential for the banking structure and for decentralizing financial services than Bitcoin possibly. So they kind of took a look at DeFi in general with this study, and then Aave in particular, kind of looking at how you can create a decentralized lending framework for customers to use and to interact with, and they don't necessarily need to go to a bank to be able to do that. So that is very different from what ING does. So it's interesting that they're kind of studying their next competitors in the next 10, 20 plus years. And just from personal standpoint, like I've used Aave, very slick, very quick and easy to take out a loan, takes seconds. You don't have to walk into a bank, and you don't have to hand over your last bill payment or your last pay stub to be able to get a loan out. And so kind of interesting to see that we have these two worlds colliding, and ING is having to study this new way of doing financial services. So I want to give this over to Zach as someone who edited the piece.
Yeah, for sure. I think you highlighted the really interesting thing, right? Is this convergence, and that's their word, this converging of sort of centralized finance and decentralized finance, and sort of these centralized finance like nodes in this network can be sort of the onboarding of all these new users to a bunch of decentralized finance protocols that make some of these bank-like processes much easier, like you suggested. So the fact that they're sort of like really kicking the tires on this is interesting. I think the fact that they looked at Aave sort of suggests some level of intelligence about what they're trying to tackle here. And again, the idea of convergence, I think, is really powerful, right? We talked about NYDIG yesterday saying, hey, you can have a Bitcoin balance in your bank account. Again, this future in which you can have access to the Aaves, the Uniswaps, the compounds of the world through your bank account. It's not looking so strange anymore. So this may be, again, one of those baby steps toward that world of CeFi, DeFi hybridization that could get really interesting for people's financial well-being.
Yeah, I'll jump in there. I think that, when we talk about DeFi, just after my rah-rah, decentralize all the things stats of the first episode, I will also say, we also shouldn't think of decentralization as this panacea. It's not something that's solving all our issues. And they actually noted, they said, there is a trade-off when we talk about, reduction of counterparty risk, but there are also technical risks around DeFi. So we are transplanting, one risk for the other there. And so that is something that people should keep in mind when they're using DeFi. Although you do get rid of these counterparty risks, and although you do get rid of this, target of, the centralized entities, you got to trust the code, and the code is notoriously buggy. There's always going to be bugs in code. And so it's important that people do keep that in mind. Even so, decentralize all the things, but I just wanted to point that out.
So what I heard there, Naomi, is you do think there is, in fact, a role for antitrust legislation. Just as another
there is no role for government coercion in any part of our lives, Ben. No role whatsoever.
Jen, go. I just had to throw that in there, and I'll take it back. But what do you have?
I just have a question. I have a question for Will. We're talking about this convergence, and we have this decentralized world and this centralized world, and we're talking about them coming together. And in your opinion, does that go against the ethos of having decentralized finance to begin with?
I think the Ethereum maximalists of the world, as we like to call them, would say yes. But at the same time, if you look at most of these applications, there's always a centralized backdoor somehow. The team behind it is still working on code. There's just implementation problems. There's bugs you don't see happening. So a lot of these DeFi projects are not completely centralized even yet. I think at the end goal is to become decentralized, where it's just a standalone application. Nobody can really touch it. It just exists. You want to take out a loan, interact with this computer program. But right now, I don't think DeFi is quite there. I think the narrative is just popular that it is there. It's not. And I think there is a place for CDeFi, as it's popularly called. I think Binance CEO CZ called that, and he brought that term to life last year, kind of as a marketing pitch for Binance Chain. But there is some value to it, because not, like Naomi said, not everyone wants to interact with these protocols, and not everyone wants to take on that computer risk. So I'll give it to Zach before we transition really quick here.
I mean, that's kind of the interesting thing about these money Legos, right? You know, money Legos are this concept in DeFi where you can sort of build on top of like subsequent like open source technological innovations. Like, what's stopping banks from being Lego builders? And I think you know, this sort of suggests that when you're working in open source technologies, like gatekeeping who can build on top of what becomes quite difficult. So, you know, these are big public permissionless networks, and if ING or if Bank of America or if Citibank or something wants to be a Lego builder, they too can be a Lego builder. So interesting to see that if that's going to become more attractive to some of those players down the road as DeFi as a whole sector, you know, tops $100 billion across various chains.